Now commodities. Oh my God, it's breaking out again. It's breaking out again. Look at this. Commodities ETF breaking out again. Look at this shit. It broke out of the trend, and then it kind of went sideways for a few days, and then it started going back up again. My God. It's not stopping. Here's commodities on a 5-year chart. Love showing this arrow. Look at this arrow. Just up and to the right. Crazy. Crazy. Commodities breaking out again. Still going up. It's not... I thought for sure it was going to go sideways and come down, and hopefully just stay in this trend. Nah, commodities like, fuck that. We're still going up. We're still going up. Right? So, the other week I was talking about my stock ETF, the RSP, and like how it's an equal weight, and I prefer equal weight over market cap weight. Same thing with my commodities ETF. It's a equal weight ETF. So I even have some info. Brought it up this time. Was prepared. So this is what is in the USCI ETF. Its allocation. It has natural gas, coffee, copper, sugar, silver, LME, PRI. I guess that's aluminum. Soybean oil. I don't even know what this is. NY Harb ULSD. Low SU gasoline. So gasoline. Brent crude. That's oil. WTI crude. Cattle feeder. Live cattle. Cocoa futures. Oh my gosh, got cocoa in there. Right? So this is different commodities in this ETF. This is what we're buying right now. This is what's fucking performing beautifully. And you can see the market value. It's relatively close, right? There's 17 million on some of these, 16, 15, 14. They're relatively close to each other, right? Here's some more information. This is on X, and you can use a little AI grok and get some information. So this says right here, the USCI Commodity States Index Fund ETF holds a portfolio primarily composed of futures contracts based on commodities. Here's a summary of the holdings, primary holdings. USCI tracks the Summer Haven Dynamic Commodity Index Total Return. That's a mouthful right there. Which includes 14 commodity futures contracts selected each month from a pool of 27 possible commodities. These are chosen based on backwardization and price momentum, ensuring diversification across different commodity sectors. And we have petroleum, precious metals, industrial metals, grains, the non-primary sector like sugar, cotton, coffee, cocoa, natural gas, live cattle, lean hogs, feeder cattle, right? All commodities, right? You got cash and equivalents, some in there, specific holdings. Now, again, where do I find the information? I was looking up what percent is oil. Oh, here we go. Is USCI equal weighted? USCI, United States Commodity Index, does follow an equal weighting strategy at the time of rebalancing, but this requires some clarification. I'll summarize it for you. Basically, they do it once a month. So they will equal weight it once a month based on certain commodities. And then for the performance of that month, they don't do anything. They just let the performance run. So as it's going up and down, like you see in our fucking portfolio every single week, the numbers change, right? So over that month, they don't change anything. But once it's at month end, they start over and they rebalance again and they equal weight it, right? So that's what they do with their strategy. Here's a comparison. GSG, ticker GSG, is another ETF. That's a commodity ETF. It does not equal weight. It says right here, commodity index is not equal weighted. Here's how it works. It's a market cap weighting. GSG tracks the GSCI Total Return Index, which is a market cap weighted index of commodity futures contracts. This means that the weight of each commodity in the index, and thus in GSG, is based on its global production levels and the price of the commodity, not an equal weight share per commodity, right? Look at another commodity ETF, DBC. DBC, Invesco DB Commodity Index Tracking Fund, is not an equal weighted ETF. Here's how it works. DBIQ, Optimum Yield Diversified Commodity Index, another fucking mouthful. DBC tracks the DBIQ Optimum Yield Diversified Commodity Index excess return. This index is not based on equal weighting, but rather on a methodology that aims to optimize roll yield by selecting futures contracts that are closer to backwardization, right? So I choose equal weight ETFs if I can get them, because I don't want bias in any of these ETFs that I'm using. right? If I bring these up, if I don't want bias as much as possible, the only exceptions to that are gold, because gold is gold. It's multiple thousands of years old, right? Like we've always used gold as a species. You have to go back to barter trade, which I don't even know how fucking long ago that was when we were still barter trading. But gold, US dollar, and Bitcoin, those are 3 directly owned assets. Where my indexed or diversified ones are USCI, which is commodities, RSP, which is the equal weight S&P 500, and the GOVT, which is the government bonds, where it's over 30 different durations, right? So if we look at, as an example, we look at our USCI, right? Let's look at GSG. So this is one commodity ETF. And then we'll add DBC. This is the other one I was talking about. And then we'll add ours, USCI. And then we will, look at that purple line, that's us right there. We're so fucking good. We'll make all the lines colored. All right, so we'll do a 5-year chart. So remember, up and to the right, pretty much for these commodities since the COVID pandemic start. The blue is the GSG, the red is the DBC, and the purple is the USCI, which is the ETF I use. So you can see overall, there's pretty good trend correlation, as there should be, because it's a commodities ETFs. These are 3 commodities ETFs, but only one of them is equally weighted, right? The other 2 are more concentrated in certain commodities, usually energy. So DBC and GSG are primarily concentrated in energy. USCI, just like all the other ETFs, has multiple commodity ETFs in it, but it is not highly concentrated in any one. Now look at it on a 1 year. Look at this breakout on this purple line compared to the blue and red, right? Back here it was pretty tightly correlated, and then it just starts separating more and more and more. Now this is a good example of diversification and not concentration, right? Because it's not concentrated in oil, because oil hasn't been doing too well. It's been going down. It's like up and down, but it's been going down. Because it's not so heavily concentrated, the other ETF or the other commodities in the ETF have been going up, and it's been carrying this ETF quite well. It's been coming up. So this is a good example of the different types of ETFs, but also equal weight versus market cap weight. So I prefer equal weight because I want diversification. To me, diversification is paramount, right? But not all the time, but sometimes, maybe more often, if you use a market cap weighted strategy, you can get better returns sometimes, but you can also get bigger losses, because you're concentrating your asset allocation into a small number of assets, where this equal weight one is not concentrating it into any individual commodity. It's spread across several commodities, but they only reallocate it or rebalance it once a month. So they're not doing it every day. That would actually cost me more money as the investor if I bought that ETF and they were rebalancing it every day. I'd have to pay more for that ETF as a fee structure. But they're only doing it once a month, which I think is just fine. We don't need more than that. But they rebalance it every month, so it goes back to being equal weighted, and they choose the best, what they consider the best commodities ETFs to track in that month, right? Based on backwardization and forward momentum and all that stuff. But the point is, we chose we chose USCI, not GSG, not DBC, because those are more concentrated specifically in oil. We want an equal weight index of commodities, and that's how we get commodity exposure in our ETF, or should say in our portfolio. So I just wanted to show that, because like I said, right now it is all about inflation, and commodities and gold are the 2 things going up, right? These are the 2 things going up. So that is our USCI ETF, doing great, breaking out again. I thought for sure it was going to come down back into this trend. Like, nope, still going up. And I know the last print for inflation was I believe at 3%. So it's starting to go back up again. So I don't know if it's going to be like that consistently, but at the very least, inflation has been going up.